Today, we will talk about alternative investments. An alternative investment is a financial asset that does not fall into one of the conventional investment categories. Conventional categories include stocks, bonds, and cash. Alternative investments can include private equity or venture capital, hedge funds, managed futures, art and antiques, commodities, and derivatives contracts. Real estate is also often classified as an alternative investment. Most alternative investment assets are held by institutional investors or accredited, high-net-worth individuals because of their complex nature, lack of regulation, and degree of risk. Real estate as an investment includes investing in physical properties or property-based securities. It can also include investing in real estate crowdfunding platforms, real estate investment trusts, and real estate mutual funds. In addition to capital appreciation of tangible assets, investors strive for operating income to potentially provide ongoing, stable cash flow. Commodities are raw materials such as gold, silver, oil, or agricultural products. Investors can invest in these tangible goods that have real-world uses and often perpetual demand due to the underlying characteristics of what they are. For example, gold's price is arguably more stable because it's used in a variety of industries and is considered a store of value. A blend of real estate and commodities, investors can turn to farmland as an alternative investment. In addition to reaping the benefits of physical, tangible land, farm owners may also receive ongoing cash proceeds should operations and sales of commodities yield positive results. Some investments may double as a hobby, with art, sports memorabilia, entertainment memorabilia, or other collectibles acting as alternative investments. These items may have historical worth or develop worth over time as related parties become more historic. The emerging form of digital currency, cryptocurrency, is seen as an alternative investment as it is outside the traditional scope of stocks and bonds. Though some may claim cryptocurrency does not offer a strong hedge against other risk-on investments, it may provide capital appreciation or passive income due to staking rewards. Blurring the lines of an alternative investment, venture capital or private equity are simply a refined branch of stock investments. Instead of trading shares of public companies in an open market, investors may seek alternative avenues to put capital into private companies or startups. Investing in peer-to-peer lending translates to making loans to individuals or businesses through online platforms that connect borrowers with investors. Peer-to-peer lending takes a very similar form as investing in bonds, though it is done on more private markets and often entails transacting with riskier clients. There is a potential for higher returns, though not always. Alternative investments are often subject to a less clear legal structure than conventional investments. They do fall under the purview of the Dodd-Frank Wall Street Reform and Consumer Protection Act, and their practices are subject to examination by the U.S. Securities and Exchange Commission. However, they usually don't have to register with the SEC. As such, they are not overseen or regulated by the SEC as are mutual funds and ETFs. It is essential that investors conduct extensive due diligence when considering alternative investments. In some cases, only accredited investors may invest in alternative offerings. Because of their unique nature and differences from traditional markets, alternative investments may have low correlations to traditional investments such as stocks and bonds. Since alternatives are considered riskier investments, they often have the potential for higher returns compared to traditional investments. Alternative investments come in different forms and structures, giving investors the flexibility to choose the investment that best suits their preferences, risk appetite, and investment goals. Because of their limited accessibility, alternative investments often have higher fees and expenses compared to traditional investments. Alternative investments are often illiquid and may be more difficult to obtain market data on historical trends or pricing. Some alternative investments are also more complex, having complex structures and terms that can be difficult for investors to understand, increasing the risk of making uninformed or inappropriate investment decisions. Getting started with investing in alternative investments is very different based on the asset you're working with. Some may require substantial capital and research, others may simply require a few clicks of a mouse button. Very broadly speaking, here's how to get started with several types of alternatives. Because they represent an entirely different asset class compared to stocks and bonds, many alternative investment industries have different tax rules. In addition, consider how different alternatives may have different income streams. As you embark on your alternative investment journey, consider talking with a financial advisor in addition to a tax advisor to best understand how to protect your asset and ensure maximum efficiency in protecting returns. Alternative investments tend to have high fees and minimum investment requirements, lower transaction costs, and it can be harder to get verifiable financial data for these assets. Alternative investments also tend to be less liquid than conventional securities, meaning that it may be difficult to value some of the more unique assets because they are so thinly traded. Some investors seek out alternative investments because they have a low correlation with the stock and bond markets, meaning that they may maintain their values in a market downturn. For these reasons, many large institutions such as pension funds and family offices seek to diversify some of their holdings into alternative investment vehicles. Regulations for alternative investments are less clear than they are for more traditional securities. Although alternative investment vehicles are regulated by the SEC, their securities do not have to be registered. As a result, most of these investment vehicles are only available to institutions or wealthy individuals. Alternative investments are investment options outside of traditional investments such as stocks, bonds, and cash. Alternative investments may include a wide range of assets such as real estate, commodities, private equity, hedge funds, art, collectibles, or cryptocurrencies. These investments are generally less liquid than traditional investments, though they may boast diversification and higher returns compared to more popular forms of investing. Here are 4 key takeaways. 1. An alternative investment is a financial asset that does not fit into the conventional equity/income/cash categories. 2. Most alternative investments have fewer regulations from the U.S. Securities and Exchange Commission, SEC, and tend to be somewhat illiquid. 3. While traditionally aimed at institutional or accredited investors, alternative investments have become feasible to retail investors via alternative funds. 4. Common forms of alternative investments include real estate, commodities, cryptocurrency, and collectibles. Hope this would help. Thanks for watching.